Welcome student. I am Assistant Professor Saili Patil. Today we will discuss your FYBCom Semester 1 Unit number 2 Piecemeal Distribution of Cash. First we will discuss about your theoretical background and then we will discuss the numerical part. So in this heading we discuss piecemeal distribution of cash, introduction, meaning, order of payment, repayment of capital, surplus capital method, and key points of solution or numerical problems. So in this chapter we just discuss first point, what is piecemeal distribution of cash and why we discuss piecemeal word. So the term dissolution is you are aware about the dissolution word, which is related with the term dissolution is used for in your 12th standard syllabus, that is the dissolution of partnership firm. So in this chapter we discuss the term dissolution with the word piecemeal distribution of cash. So what is term dissolution stand for? So it is a discontinuation of your business under the Partnership Act 1932. So in according to this act, the dissolution may be either the partnership or a firm. In this part, we discuss the dissolution of firm. So it should be understand there is a dissolution of partnership and dissolution of firm. There are the two distinct points. When we discuss the dissolution of firm, means it is a complete breakdown of the relation of partnership among all partners. It is a complete discontinuance of the relationship among the all partners. However, if this breakdown is relating to few partners, it becomes the dissolution of partnership and not the dissolution of partnership firm. So, according to this, dissolution means whatever the parts are there, it is on dissolution of firm, the assets are sold and cash out available or made available used for the payment of all the firm's liability. In practice, the realization or the sale of asset is not simple or the easy job. It may take the time for even month, even year, and that's why in practice to sell all the asset of the firm. Thus, the realization of asset is done part by part. It is gradual, or you can say it is in piecemeal, and that's why we are continue with the topic name with the piecemeal distribution of cash. The creditor of the firm will not sit quietly or till the assets are released, and they will demand their dues as and when the firm has a sufficient funds. Thus, the creditor are paid off part by part. The distribution of available fund is gradual, and you can say it is in piece. That is PIEC in part. So it is a piecemeal distribution of cash. So piecemeal distribution of cash in this syllabus or in this lesson, we discuss the n number of liabilities. So liabilities are classified, or you can say classification of liabilities divided in three parts. First, external liabilities, second, internal liabilities, and third, that is the capital accounts of partners. So according to this, some liabilities are there which has a preferential for the payment of their dues. So it is called external liability. So external liability again divided in two parts. That is the preferential liability, which include preferential liability consider government dues, labor dues, realization expenses. Other liabilities in external, that is the second part. Other liabilities are there which is secured and unsecured. Internal liabilities are there which is the loan from whatever the partners taken by the firm. It is considered the internal liability. And third point, that is the capital account. So classification of liabilities are there: internal liability, external liability, and capital account of partners. Then we move towards the next point and important points: how to pay or whom will get the preference for the payment of liability. So this is then we discuss with the next part, that is order of payment. It is important part, whom or for what is the first liability we have to pay. So start with the first payment to realization expenses. If actual expenses are not mentioned in your question, kept aside to meet the actual expenses as and when arises. So the surplus must be made available to the other creditors after the payment of realization expenses. So you can say for external liability paid first preferential liability in order to realization expenses, government dues and labor dues. Then other liabilities in case there are the secured liabilities and unsecured liabilities. Among these, secondly, secured liabilities have to be paid first. Secured liabilities are those liability which has given some asset as an security. So in this part, we just example of this heading: bank loan against the mortgage of land and building, or bank overdraft secured by floating charges on whole of the asset are example of fully secured creditors. So then payment of next payment, that is unsecured creditors such as creditors, bills payable, balance left unsatisfied in respect of partly secured creditors, loans or overdraft without any specific or general charges and outstanding expenses are the example of this heading. General charges and outstanding expenses are the example of these unsecured creditors. But there is an important adjustment when we discuss this heading. These are to be paid in pro rata basis. You can say it is in the basis of their amount. Pro rata basis, proportionately paid on the pro rata basis, means the amount of that particular headings like a creditors, to bills payable or any other liabilities are there. It should be paid within their pro rata basis. Then fourth point, that is the partners loan and advances is more than one. So it should be paid after the payment of unsecured creditors. Then finally paid to all partners capital contribution according to their capital contribution or residual figure in the profit sharing ratio. So these are some points when we discuss the order of payment under the head of piecemeal distribution. So order of payment: first paid to realization expenses, then secured creditors, then unsecured creditors. If the unsecured creditors are there, you should pay all the liabilities, unsecured liabilities, in their pro rata basis proportionately. Then partners loan account, if more than one are there, paid in their pro rata basis. And if after the payment of partners loan or internal liability, paid payments to partners according to their surplus calculation or the profit sharing ratio. Now we discuss there are two methods of piecemeal distribution of cash. First, surplus capital method and then maximum loss method. But in your syllabus, we just discuss about the surplus capital method. Under this method, you have to prepare two statements, no ledgers. Only statements are prepared. First statement, that is the surplus capital method or the calculation of surplus capital. While you calculate surplus capital, you have to use following steps to calculate your surplus amount of one person. So in this part, calculate the actual capital of all partners. How you prepare it? After making all adjustment or capital plus profits are there, any accumulated losses are there, any accumulated profits and reserves are there, it should be added in that capital account, and any losses are there, it should be reduced from that account, and which will gives you actual capital or adjusted capital. After this capital, divide by actual capital by partners profit sharing ratio, which gives the quotient as a base capital. Smallest quotient means find out the unit value by this way. Formula for this: actual capital, which is calculated in point number 1, divided by profit sharing ratio, which is given in your question. Then calculate proportionate capital by multiplying base capital and profit sharing ratio. In the point number 2, when you calculate unit capital or unit of each capital, consider the smallest unit value or the smallest quotient as a base capital of any one partner. Smallest quotient of base as base capital of any one partners and multiple with the each partner sharing ratio. Then you will get the proportionate capital for every partners or the n number of partners, which is mentioned in your question. Calculate surplus capital by dividing proportionate capital as per step 3. And as per step 1, if there are the more than 3 partners or 2 partners, one partners will be reduced and continue with the process will continue for the remaining 2 partners. If there is only one partner having surplus capital, make payment to such partner first. If there are 2 or more partners and their surplus capital are in their profit sharing ratio, distribute the cash among such partners in ratio of their surplus capital till is such surplus capital are paid off. Means whatever the extra capital are paid by that partners, prepare or the reduce up to their profit sharing ratio. They make their capital or bring their capital up to the profit sharing ratio by each partners. Or if the surplus capital of the partners are not in their profit sharing ratio, go to the again calculation of 1 to 4 steps. So it is necessary to find out this and keep with this part only one person should be remain for the surplus actual or the absolute surplus capital, and this person will get the first preference for the receiving of distribution of cash or the amount of cash. As we discuss in above points, all capital, whatever the remaining are there revised capital, you can continue with the same procedure, that is the find out the unit value, then continue with the proportionate capital, and then calculate with the deducting proportionate capital from the surplus capital. You will repeat this process until the number of partners reduced to 1. Means at the end it will be one partners which shows absolute surplus capital. Then I discuss it. There are the two types of method: surplus capital method, in this also known as surplus capital method, highest relative capital method, excess capital method, or quotient method. This is the there are the various name for the surplus capital. And second method, that is the maximum loss method or the notional loss method. There is a two similar methods. There are the two methods for surplus capital and second maximum loss method. Now we discuss with the last point, that is the key points you have to remember while calculating your surplus method or the surplus capital. To determine excess capital, first adjust capital balance with the accumulated, add accumulated profit less accumulated losses, add general reserve, reserve fund, P&L account which is on the debit side or appear on your liability side. Reduce loss, profit and loss credit balance if the profit and loss appears on your asset side. Then sufficient amount must be kept aside for the reserve for meeting of estimated realization expenses. Such amount should be utilized for the distribution once it becomes clear that the reserve is no longer required. Means if any realization and other reserves are there, other liabilities are there which has to be paid first, it should be kept aside. A reasonable amount should be kept aside for the contingent liability before any payment is made to partners. Means which should be reduced from your cash balance. If any partner has purchased the asset of the firm, the agreed value of such asset must be distributed among the all partners. Eventually, the unpaid amount, that is the loss to be borne by partners, must be in your profit sharing ratio. Means while you close your account or the books or your question, at the end of your closure of your question, you will be find your question or amount of partners capital must be in their profit sharing ratio, which indicates that your question is solved by you in correct way or the correct manner. If it is in profit sharing ratio, their amount will be appear on your statement in their profit sharing ratio. Okay, thank you student. Refer this for your theoretical background.